These streets frontline indices touch new record high following the Federal Reserve's decision to cut rate by 50 basis points. Nifty trades above the 25,500 mark. The mid-caps underperform.
Alco beverage stocks like United Spirits and Radico Khaitan climb, but Radico Khaitan is off the day's high after the Andhra Pradesh government clears a new liquor policy facilitating the retail sale of liquor by private players.
Info Edge zooms in trade today, up now almost 2.5% after brokerage firm BofA upgrades the stock to a buy rating, raises the target price all the way from 5185 to 9,000 rupees, citing a dominant traffic share with no major disruption risks ahead.
Brainbees Solutions trades almost 2% higher after BofA Securities and Morgan Stanley initiate coverage on the stock, citing good revenue, CAGR and margin expansion expected from first cry.
NTPC surges 3% as CNBC-TV18 News gets confirmed. NTPC Green Energy files its papers for the IPO. On the other hand, Irida too climbs more than 2%, almost 2%, after the government approves dilution of up to 7% equity stake in the company via a QIP.
Hello and welcome. You're watching Chartbusters here on CNBC TV18. I'm Hormuz Fatakia. With me is Mangalam Malu. Another day, another record high. We're cheering a lot more of the Fed rate cut than the Wall Street did itself. But it's a weekly expiry today, so a slight bit off the day's high from profit booking at higher levels.
Slight bit off the day's high. We're seeing the mid-cap index come off considerably. So let's see where that goes, because for the third day running now, we have nearly 15 to 1700 stocks on the exchanges declining versus 700, which are expanding as well. So we'll keep an eye out on that. But for all the market technicals, let's quickly welcome Sachidanand Uttekar. Sachi, your index trades and your individual stocks, if you could tell us.
Good morning, Mangalam. Good morning, Hormuz. Clearly, I think we have got a very decent decline in the markets, and the support is very well placed, somewhere close to around 25,450, 25,400. This is a base that we are expecting for the next move to unfold, and that's why we are recommending building long positions here. The Nifty is currently trending very close to this particular base of 25,450. So I think keeping a stop loss somewhere close to around 25,410. We are recommending building long positions close to 25,450, 480 kind of a zone. On the higher side, there's a good possibility that we may again swing back towards 25,650, 25,700 zone during the day itself. So overall, the trajectory remains on the positive side, and we continue with our buy and decline strategy.
And what about specific stocks, Sachidanand?
Well, on the stocks front, we have seen that the Nifty Auto Pack has been very consistent, and if you look at some of the constituents, they are showing signs of reversal here. M&M is the first counter which is showing a sign of change. After 3 months of a corrective move from a declining channel formation, the stock is exhibiting signs of strength. If you look at the weekly data itself, we saw a very strong positive crossover in its 5 and 20 exponential moving averages at the beginning of this particular week. Even if you look at the RSI, it has started trending confidently on its weekly scale, and the stock is now comfortably trending above its 5-week exponential moving average support. So we are expecting that this particular rally may continue towards 2930, 2960 kind of a zone, and that's why we are recommending building long positions here with a stop loss somewhere close to around 2810 on a closing basis. The second stock on our radar has been Maruti. Now, if you look at the last 6 weeks, the stock was consolidating between 12,100 to 12,400. But its RSI has already given a breakout on the daily scale. Plus, if you look at the short-term averages, even there is a good conversion, so which is indicating that there could be a possible momentum in the play. So we are expecting that this particular stock may see directional momentum towards 12,800 kind of a zone, and that's why we are recommending building long positions in Maruti. One needs to keep a stop loss at 12,280 on a closing basis.
Take that point. Thank you so much for joining in, Sachi, and giving us your calls on the index as well as individual stocks. Take a short break. On the other side, we have an important and an exclusive conversation lined up for you. Srideep M. Kesavan of Heritage Foods joins in to discuss the company's business outlook, the recent approval of investment in their ice cream plant as well. A rare conversation. Stay tuned for that. Time for an exclusive conversation here on CNBC TV18, a rare one as well. This year, one of the biggest movers has been Heritage Foods, the dairy producer and retailer. The board has now approved a proposal to set up an ice cream plant in Telangana. Plans to invest about 200 crores in that plant as well. But not just the ice cream business. If you look at, the overall business of the company, what's the outlook? We have Srideep Kesavan, who's the CEO at the company, joining in to discuss the company's business outlook and capex plans, which are in the pipeline. Thank you, Srideep, for joining in. A pleasure speaking with you. Let's get the ice cream business out of the way first. 200 crores is what the board has proposed to invest. It comes on stream by November 2025. What are typically the asset turns that you get in an ice cream business? Last quarter, you did about 31 crore of revenue from ice cream. So how much does this plant add, and what's your overall target in terms of revenue coming in from the ice cream business?
Thank you very much. Good morning, and thanks for having me on your show. Yes, yesterday our board approved a capital investment of 204 crore rupees in investing and commissioning an ice cream plant in one of our existing facilities, milk processing facilities in Hyderabad. This comes at a time when we are actually maxed out on our existing capacity and we're looking at scaling our business. Answering sharply to your question on asset turns, over a period in time, this investment will help us scale our current ice cream business, which is around 100 plus crores, to more than 600 to 700 crores. That's our expectation over the next 4 to 5 years. And for the capacity to be fully utilized, it'll take us at least 5 or 6 years. In the coming five or 6 years, we should be able to do that.
Srideep, good morning. Thank you for joining in. I'd like to speak to you. Just a follow-up to that, how do you plan on funding this capex? 1 and 2, how has business looked like in this quarter so far? What have been the demand trends that you're witnessing? And what have been the average, say, procurement prices for milk so far this quarter?
Unfortunately, I won't be able to give you any specifics about the current quarter, but if you have followed our first quarter results, you know that the company is on a good trajectory, and this is not just a one-quarter performance. If you look back to the last 9 or 10 quarters, the company has actually led growth for the dairy industry. Actually, we've been one of the fastest growing dairy companies in the private space, or actually listed space. So the momentum is very good as far as the business is concerned. And answering specifically to the question on procurement prices, I think we are witnessing a good amount of stability in the rural economy. And it is not just to do with dairying. Actually, if you look at the agricultural commodity space itself, the commodity prices are relatively stable. We are seeing good prices given out to farmers, which means that the farm economy is actually looking really good. Dairy prices are really good. It is profitable for the dairy farmers to participate in dairying today. And the monsoon has been really good. And across our markets, we are seeing planting happening on time, and we're seeing a lot of green fodder. So all in all, actually, it is looking good and a stable period for a dairy business.
All right, good and a stable period for dairy business. So let's get in some more numbers out of the way. You can't talk about this quarter. I'm sure you can talk about, the targets for this year. The last quarter, for the first time, you crossed 1,000 crore per quarter in terms of a revenue run rate. Should we annualize that and look at close to around 4,000, a little more than that, when it comes to the entire year's revenue? And while you talk about that, also give us a sense of where you expect margins to be in this year because of, 1, stability in procurement prices, and secondly, increase in proportion coming in from your value-added products.
Yeah, thank you for that question. The business actually has been trending a mid-teens kind of growth rate for quite some time. And it is not something that has happened only in the Q1 of this year. So I think that we should expect that growth momentum to continue. I cannot give any specifics, but I think our recent past performance in the last 8 to 9 quarters is testimony to the fact that we can continue that growth momentum going forward as well. So a mid-teens kind of growth is what we expect out of the business. And that happens because our value-added products are growing upwards of 20%. In Q1, we ended with 38.5% of our contribution from value-added products. You must be aware that Heritage is an integrated dairy player with a full range of value-added dairy. Ice cream is just one of the product clusters that we play in. We are quite strong in the dairy food space with curd and paneer, which is actually growing very well for us. And we continue to see growth in paneer as a category. Drinkables is another area where we are seeing a lot of growth. In fact, just 6 months back, we had invested we had infused capital to create a facility to pack aseptic cartons. So we have milkshakes and cold coffee and lassis in cartons today, which is also expanding really well. Sometime back, I think it was in the month of June, we launched ghee-based laddus, which actually strengthens our position in the dairy sweets category. And now we have ice creams. Ice creams also has been growing robustly for the last 3 or 4 years. In fact, COVID was an inflection point, and the industry as such.
Shrideep, sorry to cut you in due to paucity of time. I wanted to ask you one very important question on margins. First, on the gross margin bit, you're heading towards your FY21 levels of around 25%. What is the outlook there? And do you see double-digit margins by the end of the year? Is that a possibility?
I would say that the Q1 margins will be, we should be able to sustain the Q1 margins. Because like I said, the milk prices at a farm level is stable. That means that the margins would continue to remain interesting for us to drive growth. At this point in time, we believe that we need to invest in the market to drive growth. We are at a stage, if I can talk about value-added dairy. In India, we are still at a very, very, very nascent stage. Many of the categories are in single-digit penetration as households are concerned. So we continue to invest to drive long-term growth, and we will be able to deliver the bottom line similar to Q1.
All right, take that point. So 9% sort of margin should continue for this year. Final question from our end. There was a marked shift in the way the street looked at your stock, largely after the election outcome. So just wanted to know, what could the tailwinds from a favorable policy or political environment be for players like you right now?
See, we are a business that is run professionally and independent of the political or, whatever is the regional scenario. In fact, as a company, we are based in Hyderabad, as you know. Hyderabad is our headquarters, so Telangana happens to be our largest market. So I don't think that there is any relationship between the two.
All right, thank you for clarifying that, Rare Voice, and giving us good growth outlook out there as well. Wish you good luck for the year and the years coming ahead as well. With that, we take a short break, come back, focus on the macros, Federal Reserve's big interest rate cut decision, and how past cycles have impacted markets. Stay tuned for that. The big rate cut from the Fed overnight. What is the impact of that on our markets? The Economic Affairs Secretary, Ajay Seth, says he does not see any significant impact on inflows in India. How has it been in the past? Hormaz joins in to tell us more about that. Hormaz.
See, Federal Reserve has done what it assesses the good for the US economy, the largest economy in the world. And I see it as a positive for the global economy, including for the Indian economy. As far as your question about flows are concerned, it is a 50 basis points cut from a high level, from the high level. So I don't see that making any significant impact on the flows. You have to see how the things develop going forward. RBI, Monetary Policy Committee of Reserve Bank of India will take a decision at appropriate point of time. Right. And my sense is that their decision is based on what is good for the Indian economy. We should not read too much into the event which happened yesterday.
The Fed has finally cut, much awaited, much anticipated, but the market has seen a buy the rumor, sell the news sort of a reaction to it, and yet it has marked the start of the latest easing cycle by the world's largest central bank. So how have the markets generally reacted in previous cycles? Now here we are considering returns from the first day of the first cut or the hike till the last day of the last cut or the hike. Now go back to 1990 when the world was on the cusp of the Gulf War. Fed began easing and continued to do so for the next 2 years until September of 1992. Almost 18 times is when the Fed cut cut rates. The reaction is there to see, and during this 2-year period, the Nasdaq was up 23% and the S&P 500 and the Dow Jones also seeing double-digit returns. A couple of years after that, the Fed chose to bring rates back to normal to a certain extent, and starting February of 1994 until the next year, the Fed raised rates 7 times, and the US markets did not react well to that, seeing low to mid single-digit negative returns. Now the US in the mid-90s is on the cusp of a dot-com boom, but it hasn't happened yet, and during this 6-month period between July of 1995 to January of 96, the Fed cut rates thrice, and the market on expected lines cheered the move with double-digit returns. Now, to ensure that the economy does not overheat, the Fed raised rates once in March of 1997 before easing again a year later. By then, the US markets began to deliver outsized returns, as you can see with the Nasdaq here, and that period also coincided with the Asian financial crisis. Now, the dot-com boom finally arrived and the Fed began to raise rates at the turn of the millennium. Between June of 99 to May 2000, the Fed raised rates 6 times, and while the Dow and the S&P 500 didn't do much during this period, the Nasdaq, for obvious reasons, was up almost 40%. 2001 was a tough year. The dot-com bubble burst. 9/11, the Fed had to cut rates 11 times during this period, and yet the markets did not respond in kind to such a move. That 11 cuts were followed by 2 more between November of 2002 and June of 2003. The Nasdaq in response outperforming here as well. And the global financial crisis by then arrived in October of 2008, and the Fed took a big decision to bring rates down to 0. And in this cycle, the overall gloom around the global economy shows up in these returns by the US markets. The Fed kept rates at 0 for 7 long years, and when they finally decided to hike in December 2015, the global markets had a taper tantrum. The period until December 2018 saw 9 rate hikes, but by then the market had matured enough to know that this was on the cards. The Dow and the Nasdaq saw returns of almost 30% during this period. And come 2020, when COVID-19 struck, the Fed once again in a span of 2 weeks drove rates back down to 0. But then the extent of the uncertainty was such that the markets fell to almost 20% in just 2 weeks before embarking on a never-seen-before bull run. Things returned to normal by 2022. The Fed has yet again embarked on raising rates almost 11 times until July of last year, resulting in mid-single-digit returns here. And since then, the US markets have been on a tear with returns of almost over 20% for almost every broader market index in anticipation that the Fed will ease sooner or later. The Fed has eased now, but that easing has in turn resulted in some unease for the street on the road ahead.
All right, take that point, Tormas. Thank you so much for putting all of that into perspective. With that, we are out of time on this edition of Chartbusters. But that's not all. Don't go anywhere. Take a short break, come back. We continue our Fed coverage. On the other side, an exclusive conversation with Chris Wood of Jefferies coming up.